Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the Aussie versus US dollar. Today's date is July 2nd, 2024. Let's get started. I'm going to look at the 4-hour chart for this currency pair. And if I put a red box around this area right through here, this is where most of the price action has taken place. Going back to, the mid to late of April. And as you can see, most of the price action has been between 0.6579 up to 0.6689. That's only about 110 pips from the low to high trading range. Now, we did have extensions. We extended to the downside here. We extended to the upside here, creating a larger trading range. But for the most part, the the value area where most of the trading has taken place is between this 110 pip trading range. So now let's look more closely, and what we've seen more closely is that the price has been able to hold support more or less near the midpoint of this red box between the 0.66189 and 0.66279. Last week's low prices came within that swing area right through here. It was developed going back in time all the way back to this area right through here. So there is a bias more to the upside here for the Aussie versus US dollar. In trading this week, the price low did come down toward the high of this swing area, but fell short of it after breaking below both the 100 and 200 bar moving averages on the 4-hour chart. Those two moving averages currently are nearly converged, and that's going to be the next key barometer, or the key barometer going into the end of the day and into the new trading day. As long as the price can remain above that level, the bias remains more to the upside. We're above the 50% of this range right here. We're above the 100 and 200 bar moving averages on a 4-hour chart. We have still work to do to the upside. We need to get above this area right through here between 0.6676 and 0.66896 and stay above that level to show that the buyers mean business. That ultimately we would require a move above the high price that we saw here in the mid-May at 0.67135. If the price were to get above the 0.66896 level and stay above that level, that would be more bullish for this pair, and we could see further momentum in the upward direction for the Aussie versus US dollar. Now, conversely, if the price were to move back below the 100 and 200 bar moving averages and stay below that level, then the sellers would be more in control. We look for a break below the 0.66189, and then we look down toward the low of the red box. I'll put it in again, and that level also happens to correspond with the 38.2% retracement of the move up from this low right here, the mid-April low, to the mid-May high. And also the 100-day moving average. Both those levels currently come at the low of the swing area at 0.6579, and then the 200-day moving average at 0.65548. So buyers are making a play or making the best play in the Aussie versus US dollar now, but there is lots of ups and downs, and there is work to do on the top side for this currency pair to prove that the buyers mean business and can take more control from the sellers. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.